Good afternoon. This is the Elliott Wave daily update for the NASDAQ 100, being recorded on Monday, September the 15th at 2:55 p.m. Pacific Daylight Time. Globex is getting ready to open in about 5 minutes, and I just want to go over quickly. If some of you may have already or are going to watch the S&P prior to the NASDAQ, and there have been some changes to the labeling and the degree. Not necessarily to the trajectory, but it does add the degree change adds additional upside potential in the S&P. So the same thing can exist here, but I'm leaving it as is for right now. So I'm starting here on the 1 hour chart, and still this on the S&P now is a minuet fourth wave, and the uh, minute wave three would still be in progress. And so what this run is going to be finishing is that minute third wave, whereas in this case, we're still working on that fifth wave. It may change, but I wanted to just kind of discuss what's happening here for right now. This gap is due to the fact that the contract has rolled from September to December, even though we still have 4 days left on that September contract. And the volume should switch. I think today there was still greater volume, not by much, but greater volume in the September contract versus the December. Okay, picking up where we left off. I think I'd put a 3 here and the 4 was here. I've switched that and I moved that up to here. And I believe that it should be pretty well done. 1, 2, 3, and a 4. And then the 5 up here. Might have one more little bit of a high to put in. And that's the case. I think we could probably see, I could run something very quickly there to there, and then put it up onto this tiny little 4. And you can see we have 24,622. So we're at 24,538 when we closed. So it's actually not all that much higher. So I'm going to take that off for right now. And so from there, we'll get a fourth wave correction, which again would bring us back down to there. And then we run back up in that fifth, and that then completes this third. And here are the markers for that, still the same. Now, for this minute fifth wave, we're running up to its first resistance point at 0.618, which is 2484. I'm just thinking that's just plain old resistance, not necessarily anything that's going to be completing this entire rally. Even if it was on the minuet and we were in the minuet fifth wave, I don't think that it's going to complete there. I think there's still additional up there before we're done with that minute third, but we'll see. Now, coming in, 1, 2, 1, 2, 1, 2, 3, a 4. We come back up in the 5. We come back down, likely the same level, and that would put in the sub minuet wave 4, because we're going to go run up with this fifth wave. Here's our first resistance level at 24,739 to complete this third. And then we have additional up here at 24,841. You can see they're just overlapping one another right there. So they're together there. So we have 24,739, 24,841. So it's kind of interesting because it doesn't look like 100 points, but it is. So, but or somewhere in between, it also can stop. But I think 2.618 seems pretty strong for me. And I think we could contain it there, get this third in, and then come back down in the fourth. In which case, wherever this fourth comes in, it's still going to be here. We're going to get another fourth that should come down, hold that area, and then rally again up in the fifth to finish this third. And that one continues to project right now to 24,931 to 25,165. And so we got those levels. So all in all, I do believe for both markets, for both the equity markets, including the Dow for that matter, and the Russell, I think all the indexes, the equity indexes and the ETFs are all heading to additional new all-time highs. So I'm thinking that, we're needing to get a little bit more room on the upside for the potential insanity on going up. Now, again, Wednesday, I think we get a lot done before Wednesday, and then at 2 p.m. Eastern, we will find out what, if any, that rate cut's going to be. Right now, the market is pretty much demanding a quarter point, and that's what's been factored in thus far. So the surprise would be one of two things. A positive surprise would be that they actually cut at 50 basis points instead of 25. That would be a surprise that the market would definitely flip and just go up very high, I think. The other being that we get nothing. So all of this, in fact, we're also seeing that the yields in the 5-year note, the 2-year note, the 5-year note, and the 10-year note and the 30-year bond, all were declining. As the bond price goes up, the yields start to decline. And also, I noticed today in the T-bills, there's a 13-week and a 26-week, that those interest rates that were auctioned today come in just under 4%. So the rates are coming down, and we're starting to see it in the mortgage. We're starting to see it pretty much across the board that rates are starting to come down. So how much more or how that's all going to work itself out, yet to be seen. But it should continue to fuel some upside strength for our markets. Now, we just opened in Globex and we're noticing that, yep, we are coming off a little bit. And so we're going to, let me just take this down to that 15-minute so we can take a cleaner look inside here. So again, there's the first line support, and there's the one I think we can get to. But if that's 1, 2, and that's 3, and that's 4, yeah, that's where it probably should come. If I'm really going to put this third up here, there is a very strong chance. I got 1, 2, 3, 4, yeah, 5. That would be the 3 right there. And so we can come back to here. And so 24,316. Wow, that could be quite the jump, or quite the drop. So I think our first level is going to come in at 24,484, which is still like 50 points right from where we are. So that's also a possibility. And if it holds, and we have additional support at 24,468 from the 15-minute 50, coming back out to the hourly chart, we have the 20 at 24,434. So the moving averages should continue to provide some support. And you can see they are this is the hourly chart, vertical. They're just going vertical now. The market has been displaying a lot of strength, particularly in the NASDAQ, and that is just pushing these higher. So yes, it is getting very close to a time where we just have a little bit of fallout. And I think we can get that once the interest rate news is out, and even getting the cut, I think we can get a marker put up there, and then we get a heavier corrective phase. Now, whether that comes after we put this third in and it comes as a part of this fourth wave, then we'd be looking for it no more than that. But I think it's like if we can get up a little bit higher to where we're doing this third, it'll be complete, and that could be up into here, then that fourth wave would be expected to come back quite a bit. So we're looking at here, or any of these levels down in here for a fourth wave to come sailing back down. And so we're gonna have to wait and see. But I think that we could get, depending on what completes once we get this rate cut and the market is expected to rally, where it ends up and then how it turns, we'll be able to then put together some fib levels coming down. But I would be looking, simply because if we just look at how these moving averages, they're really pretty much beginning to go a little parabolic, a little bit. When you bring it down and you're just taking a look on the 15-minute, it's pretty steady, pretty straight up. In this one, very much going a little bit vertical, launching, so to speak. And so I think it's like we're getting very close. The hourly chart's very overbought. So we can just start to put corrections in as we finish these moves. So again, 3, go to 4, come back up in the 5, be done. That finishes this third, come back down in a fourth, which should bring us back to here, go back up in that fifth to finish this third, and then we get a larger. That's where I would expect we get the largest. So I think we can finish this 4 and then a 5, and then this 3, 4, and a 5 between tomorrow and Wednesday. Then we get that larger correction as this third finishes. All right. So, and trust me, I'm not ignoring the fact that these are likely to change as they did in the S&P. I'm just leaving them alone for today to see how this all plays out going into tomorrow and likely even Wednesday. But we'll see. So again, there are the possibilities that we begin to see this change to the minuet fourth wave, and therefore the minuet fifth wave has the potential to get up to 25,980. Right now, the minute fifth wave has the potential to get up to 25,980, 26,000. And so we're trading at 24,533. So it's 1,400 points. Still, that's pretty big, but we'll see what happens between now and Wednesday afternoon. All right, that is actually going to be it. Our gamma levels will be updated with the morning update. Also, just let me include that we do have a fairly decent economic calendar for tomorrow. 8:30 a.m. U.S. retail sales and import price index. And then at 9:15, industrial production capacity utilization, 10 a.m. business inventories and home builder confidence index. So it's fairly kind of compacted there between 8:30 and 10 a.m. All right, next update will be tomorrow morning.